Imagine investing your hard-earned money with the hope of building a secure financial future, only to discover years later that a few simple mistakes quietly destroyed much of your potential wealth. This is exactly what happens to millions of beginner investors who enter the market with excitement, but without understanding the common traps that can cost them thousands of dollars over time. One of the biggest mistakes beginners make is investing without proper knowledge, often buying stocks or assets simply because they heard about them from friends, social media, or trending news, without truly understanding how markets work or how companies generate value. Another common mistake is trying to get rich quickly, chasing risky opportunities that promise fast returns, instead of focusing on the long-term strategies that most successful investors rely on. Many beginners also failed to diversify their investments, putting too much money into a single stock or asset, which can be extremely dangerous because even strong companies can face unexpected challenges that cause prices to fall sharply. Emotions also play a powerful role in investing mistakes, as fear and excitement often drive people to buy when prices are high and sell when markets fall, creating a cycle of poor decision-making that damages long-term returns. Some investors also focus too heavily on short-term market movements, constantly buying and selling in response to daily price changes, rather than allowing time and compound growth to work in their favor. Another mistake is failing to reinvest profits, such as dividends or investment gains, because when profits are reinvested, they create a compounding effect where earnings begin generating additional earnings, significantly accelerating wealth growth over time. Perhaps the most expensive mistake of all is waiting too long to start investing, since many people delay because they believe they need more money or more knowledge before beginning. But the most powerful advantage in investing is time, and starting early allows compound growth to transform even small investments into substantial wealth over decades. When beginners learn to avoid these common mistakes by educating themselves, staying patient, diversifying their portfolios, controlling emotions, focusing on long-term strategies, reinvesting profits, and starting as early as possible, investing becomes far less about luck or speculation and far more about disciplined decisions that steadily build financial independence and long-term security. Investing can be one of the most powerful tools for building wealth, but success in the market rarely comes from luck or perfect timing. More often, it comes from avoiding the common mistakes that cause many beginners to lose money or give up too early. By learning how investing really works, staying patient instead of chasing quick profits, diversifying your investments, controlling emotional decisions, and focusing on long-term strategies, you give yourself a much stronger chance of building lasting financial growth. Remember, financial freedom doesn't come from one perfect investment. It comes from consistent, smart decisions made over time. And the best time to start building that future is today. If you want to learn more about investing, wealth building, and financial success, subscribe to Blueprint of Success, because every step you take today can move you closer to the financial future you want.